Hey traders, welcome to the Trading Price Action Program. In this program, we're going to have a really deep dive into trading price action. Some of the setups, some of the strategies we employ, different ways to look at the market, different ways to think about the market, and just a complete new, fresh change and a fresh approach. Now, there's either two ways of using this for you. You're either going to go, okay, I'm kind of struggling with my trading. I need a bit of a kickstart. I need a bit of a jump. I need a brand new, fresh way of looking at things. And this will tick a big box for you because it is a new way, a new look, new approach. You've got strategies, you'll have setups, you'll be able to go away after doing this program and progress forward. At the end of the program as well, I've got a kind of challenge for you or a plan of action, if you like, over a certain period of time that you can run through and restructure. So it's not like do the course and forget about it and move on. It's a case of doing the course, go through the plan, go through the first 30 days, go through the 30 to 90 day plan. And so it's something that's going to put you in good stead and start you back on that fresh path towards where you want to be. The second group of people are going to be people who are trading nicely already. They're doing okay. You're kind of chugging along, but you've got a thirst for more knowledge. You're kind of say, you know what? I'm interested in other strategies. I'm interested in other ideas, different approaches. Either way, you're going to look at this, watch the course. Hopefully you're going to go away and go, yep, you know what? There's a lot of good information in there. It's designed in a modular format, so you can go back and you can rewatch any of the bits that you like. You can kind of go and dig back into certain parts that you feel are really super interesting to you in the future. You can watch the whole thing again. You can take it as you like. In terms of consuming the content, again, you can either binge watch it, Netflix style, or you can come in, dip in and out. It's designed to do either of those and it works very, very well. Preferably do the whole lot in order rather than skipping all about, because some of the stuff we'll be talking about earlier things in earlier chapters and earlier modules, so it makes sense to do it all in kind of sequence. But whether you do that all at once or whether you kind of split it up into each individual module or each individual video, entirely up to you. It's designed to kind of consume as you prefer. So without further ado, let's get right into it. Okay, so trading price action. Now, this is the quote. What is price action? This is the quote from Investopedia. This movement is quite often analyzed with respect to price changes in the recent past. In simple terms, price action is a trading technique that allows the trader to read the market and make subjective trading decisions based on the recent and actual price movements rather than relying solely on technical indicators. Now, you know, a lot of people kind of define price action in different ways. And you'll see different people out there with different kind of views on it. Some people say it's pure technical analysis. Some people say it's pure like candlesticks with no indicators. You know, there's no definitive answer. It's not like this is a certified definition for price action, but that's pretty close to me. And I think that we're making trading decisions based on recent and actual price movements rather than just looking solely at technical indicators is the sweet spot of that quote. I think that's the real kind of gem there. We're not just relying on technical indicators. We're not just looking at charts and kind of guessing. We are thinking a little bit more about what's going on. We're looking at prior price action. We're looking at current price move or prior price movements and current price movements, and we're developing an idea and a thesis and a kind of approach that we want to take. Now, we're going to dig into this massively as we move through the course, of course, but I just want to get this overview. And the first kind of module we've got now is we're going to be talking about becoming a price action trader, the different approach that you take, the different viewpoint, the different way that you look at the markets, because that really, to me, is the fundamental foundations of the whole process. It's just looking at things differently, appreciating things for what they truly are in the market. And even if you kind of look at all the strategies we've got coming up later on in the program and think, you know what, then I like a couple of them or they're not quite for me, which is fine because we're all different traders. Hopefully you will take them and use them, or you'll take some and you'll kind of tweak them, adjust them to suit you. But either way, even if you don't, the approach and the overall change in view of the market will give you much more clarity in your trading. All right, so what have we got here? This is a summary of what we're looking at kind of in the first module, if you like. So becoming a price action trader. The first thing is the trader's goal. We're going to look at the trader's goal. We're going to change the kind of what we're trying to achieve as traders. Again, we're going to kind of go back to basics here. We're going to dig right down into the dirt, right down to the foundations, and then build up from there, so that we haven't got a rocky foundation that kind of could topple. If we start to make some profit, we start to kind of have some drawdown, we don't want it to topple. We want a nice solid foundation structure so that we can build from it, so that it will withstand pressure from loss, and pressure, of course, psychological pressure from profit. And as we grow and expand and increase our trading size, we want to be able to have a good solid foundation that can deal with that. Because if you can imagine, you've got a real narrow foundation that's very, very thin. As soon as you start piling pressure onto it, as in increased trading size, increased profitability, in different all these added things that come on, it can't withstand it, and it's vulnerable to complete collapse. Whereas if we build it with a nice wide base, a nice solid firm base, and then work our way up, yes, we're kind of looking way ahead to where we want to be, but ultimately, if we're thinking way ahead, then as we're adding these layers and layers and layers and layers on, we know we've got the solid foundation. The key thing is when we take steps back, which we will do, it's trading, it's life, it's the way it is, we know that we're not going to go back to zero. We can build and build and build again. Okay, so the trader's goal. We're going to look at making as much money as possible with little risk as possible, using that as your new benchmark. Go into that more in more detail in a second. Then this is the real key, looking at trading from a perspective of risk versus reward against the probability of success. So you've got a risk-reward ratio of your trade. You might have heard of talking about that before, or you might have seen it in textbooks or read about that. And that basically says, okay, I'm going to risk kind of 10 pips to make 50 pips if we're talking about FX trading. If we're talking about stock trading, might be I'm going to risk $10 to make $50, that kind of thing. So the risk is less than reward, a risk-reward ratio. Again, we'll go into that in more detail. And the probability of success is what the outcome that we expect the trade to happen. So in other words, what's the likelihood of that trade being a winner? And weighing up those two odds, and that's something that I want to look at in a lot more detail, because that really is fundamental to how we pick our trades and how we choose our trades and how we view trading. Number three, really key one in this as well, a different way of thinking. So thinking about price differently than everyone else. So this really will set you in the best stead possible. It's considering, your counterparty, the trade counterparty, their motivation, their feelings. We're just touching on that, but again, massive depth in that later. I think that's one of the really key important modules on here. Okay, then we're going to look at supply-demand extremes. So how to reframe our thinking on trading and kind of look at the charts and kind of getting bogged down with the noise and the fog and losing clarity, but reframing it into thinking in terms of supply, demand extremes, and learning to identify significant imbalances, because that's where the sweet spots and the opportunities come for us as traders. All right, then we're going to talk about momentum ignition. These are the catalysts and patterns that create significant price momentum before it reaches that peak velocity. So we want that momentum ignition, bang, we know what momentum is, it's kind of gathering pace. We want to try and find out something that ignites that momentum so we can jump on it as early as possible to ride that wave of money flow into the market. Then the final one here, number 6, exhaustion. So finding those patterns, looking at patterns that precede a stall in price momentum and potentially reveal a price reversal. So as momentum's kind of really driving up, what clues do we have? What can we see in the price action that's going to say, hey, you know what, that could be an exhaustion move now. We could look to be taking profits here, or if we're not involved in the momentum move in the first place, we could be looking to oppose this move now. When everyone's kind of riding the train and cheering themselves on for being so good, we could be the shrewd ones who are standing back, looking at it, observing, using our different way of thinking, observing, looking at supply-demand imbalances, observing, looking at our risk-reward ratio versus our probability of success, and saying, you know what, this pattern kind of normally precedes a potential exhaustion. Let's see if we can generate a trade idea from that. We'll go through our triggers and filters again, which we come on to in later on in the series. Okay, so price action. This is where we get into the good stuff. Let's go. So the science behind the strategy. Let's talk a little bit about that. So long before computers, traders would use price action to determine the future direction of a stock / market. You know, before we had all this information on, and arguably we've got more than we need now. I mean, you've got multiple screens, you've got kind of multiple data. Data's very, very cheap. We've got all these charts, we've got thousands of indicators, thousands of timeframes. Charts can do what they want. You can have ticks, you can have volume bars, range bars, you can have all sorts. So we've got this absolute mass of information coming in. But if you think about years pre-computer, guys would be either literally in the pit memorizing in their head where price has been. Okay, it's been down to 55, it's now 58, 56, 58 trading, 58, 59. They would work out in their head what's going on. Or you'd have traders who weren't necessarily in the pit, just kind of, I would say screen traders because they weren't at a screen, but other traders who weren't in the pit, who were making calls on positions, who would perhaps be marking them off on a manual chart. They'd have literally a big piece of paper, a big piece of graph paper, and would be marking the price on, whether that's daily, whether that's every 45 minutes, 50, whatever it may be. And then they wouldn't be necessarily doing indicator calculations. I'm sure they kind of came up with moving averages and stuff like that, but they were looking and saying, okay, what is this telling me? What's the supply demand telling me? What is going on behind it? And so it's going back to that core foundation of just genuine what is flowing around. And I know, I appreciate that we've got computers now and algorithms and stuff, and we will talk about and deal with that later. But ultimately, it's still based on who is buying, who is selling, how much they're buying, how much they're selling, who's the more aggressive of the two. That's where the market's going to move. If we can decipher that, we're on to a win.